Good morning. Good morning. Let's see if anybody joins in. We are all at work probably at this time, and that's okay. Please stay at work. But I wanted to come on because today I got the bright idea that I need to start going live in the morning. So that's what I'm gonna do. I just decided I want to start a morning series going live at 8 a.m. every morning, so 8 a.m. Central. So this is kind of late. It's late because I just now decided that I was going to do this, and that's fine. But yeah, so I want to start going live, and I want to start talking business, okay? As you guys know, there's been a lot going on with me lately. I have ventured out into the world of entrepreneurship, and what I realized and what I've learned is that what you think you're going to do when you start off is not how you end a lot of the times, and there really isn't an ending to this journey. Hola, Jamisa. Hola, aura of opulence, my bad. Let's put some respect on the title. What I was basically explaining is that I decided I'm going to start getting on lives at 8 a.m. every morning. So 9 a.m. is a little late for me, but I just decided this at 8. So we're going to figure this out. But Monday through Friday, I'm going to go live at 8, and I'm going to talk business. I'm going to be explaining some things. Hey, for the next Tech to Graph. Hola, how are you? So I'm going to start, wait a minute, I think I know you. So I'm going to start going live. We're going to start talking business. When you're an entrepreneur, what I realized in the beginning of your journey, the journey doesn't look like all the time how you feel like it's going to be when you first start. You pivot a lot. And so for me, I'm going to be making a big announcement soon, but I'm pausing on hair. Not ending here. We're pausing. We're taking a quick pause. Okay. Yes. Because I really, when I want to do something, I need to do it. And I have to do whatever I'm doing full force. Good morning. So a lot of the times when I'm diverting my attention to many different places, whether it be, I know I want to go live to talk business, but I need to go run to the professional beauty store, because you can't just get the hair color you need from the corner beauty store. You got to go to the Armstrongs, you got to go to the RDA Pros, and you got to run across town looking for some hair color, looking for some protein treatment for a whole service that is probably on the weekend because they closed on the weekends. So it's like, okay, now I can't do what I need to do during the week because the week is focused on getting what I need for the weekend. So we're going to pause and we're going to come back to that. And I'm going to let y'all know when I'm getting back to that and how that looks when I do get back to it. But for now, what we're doing is Deanna is building out a full financial service practice. Okay? We're building out a full financial service practice. What does that mean? That means that the biggest structure that I am going for will be that it's structured in a way where you have free consultation call. That's the first call. Then it's going to be a strategy call. Strategy calls will be priced at $50 per call because I know a lot of entrepreneurs starting off, they don't know what they don't know. So they need to figure out, okay, I need to leverage your expertise to figure out what it is that I need to keep on my radar. Like, I don't even know what I need to hire you for. And so I feel like, and everything is dependent on business models. I never want to give some rigid services that people don't need, or if it doesn't make sense for your business model. Like if you're grossing $50K a month, why am I giving you a service that's for somebody who's $5 million a month, and vice versa? So basically helping entrepreneurs think about, okay, this is what you want to think about at this point in time when you hit this figure, or when you reach this goal, this is what you want to direct your attention to. But right now we're going to focus on this. And when we come down to your customized plan of what you what works for you. Then we talk, okay, what does the pricing look for whatever service that you need if you want to hire me, or if there's somebody else who could do it better, I'm gonna refer you to that person. But I really want to start serving people where they are. 50K a month, yes. Hey Lex, hola. So basically, I made an announcement. I am building out a full financial service practice. So with that, I'm gonna be going live every morning at 8 o'clock, talking business, talking things that entrepreneurs, budding entrepreneurs, thinking about entrepreneurs, seasoned entrepreneurs would love to know from a CPA. I think I want to call these sessions Ask a CPA, so that y'all can ask me y'all questions on live after I give whatever spiel that I'm going to give for the day. But today we're going to talk business structures. I think a lot of people, they don't know what the difference, to be honest, between LLC, S Corp, C Corps, all of that stuff. What does that mean in real life? I'm going to give a confession. I had to learn this stuff, to pass the CPA, but you don't know what that means in real life until you actually register in the business. Let's be honest. I'm going to put myself there on Front Street, okay? Talk about looking at material. Okay, Lex. But I think a lot of times, we'll know sometimes we don't even know the book knowledge. I had to know the book knowledge. Y'all, okay? I had to know the book knowledge, okay, to pass the CPA, but that's all I knew. I didn't know what that meant for, okay, who am I registering? How do I get an LLC? How do I get an S Corp? What are the real benefits to each? Why do I need one? Should I just do a Dba? What am I doing? What are all of these acronyms? I'm confused, okay? So I'm going to break them down today. I'm even going to I was going to just talk LLC, S Corp, C Corp, but I'm going to throw DBA into the mix now that I'm thinking about it. So we're going to throw DBA into the mix, okay? So what is an LLC, S Corp, C Corp, DBA, etc.? Okay, so let's talk from an IRS perspective first. So we're thinking federal. From an IRS perspective, in their mind, there is only a few taxable entities, okay? That's the individual. That's when you file your individual tax returns and, you put in your individual social security number at the end of the month, okay? At the end of the year when you file your tax returns, or your marriage or whatever the case may be. Individuals, 1040. Right? That's the tax return we're all used to. We know what that is, okay? Now, there's another entity, right? So there's there's the individual, there's the corporation, and then there's the non-for-profits, but we don't need to, there's the government. We don't need to go down those. We're not going down those rabbit holes for now. We're staying with the individual and the corporation. That's what we're going to be talking about for this specific live. So, an LLC is not a corporation. I hate to break it to you, whoever thought it was. It is not a corporation. The IRS does not care about your LLC. In their mind, it is not a real organization. In their mind, it is a sole proprietorship, which is you. So at the end of the day, you're going to file your organization. Okay, yes, let's take these notes. Okay, you're going to file your organization tax returns, whatever, on a Schedule C for an LLC on your personal tax returns. So there is no corporation tax returns for an LLC. So let's make that clear. What is the purpose of an LLC, you may ask? Okay, cool, let's break that down. That's when we come down to the state perspective. That's why when you register for an LLC, you're not going to the IRS. You are going to your individual state and you're saying, hey, state, I am operating a business as an LLC. What does that mean? That gives you some type of liability shield to create an organization outside of yourself that you can assign it. It's on EIN. And EIN is something that you're going to go to the IRS for. I don't want to complicate you too much. We're going to dive deeper into that into some future lives. Hey, Soraya. We're talking business. I'm breaking down the difference between organizations. So you file your LLC with the state. And what that does is it gives you some type of liability shield. Let me break that down. I'm a hairstylist, right? I'm operating as a hairstylist, right? So I am working in a suite, okay? Let's say, yes, let's say for my suite, my name is on the lease of that suite for a whole year, whatever. I have an obligation. Deanna's name, okay? Let's say something goes terribly wrong in that suite, Lord, knock on wood. And, you know, it blows up, it's on fire, damage the whole property. Okay, fine. The leasing agency or the landlord of that suite property, okay, they're going to say, hey, Deanna, you owe us $400,000 for this suite. And I'm going to be like, oh, the devil is a liar, because I ain't made $400,000 in this suite. So how the heck do I owe it? Here's the thing. If Deanna's name is on that suite, Deanna owes it. But guess what? If Deanna had an LLC and the LLC's name was on that suite, I'm like, okay, cool. Go ahead. Come for the $400K. That LLC could file for bankruptcy, but Deanna is good. Deanna is fine over here because the LLC ain't made $400K. The LLC, they never gross $40K. So go after it all you want to. Take us to court, do whatever. I'll show up for the LLC because, you know, it needs a representative. I'll show up. I'll argue my case. Go ahead. Declare a judgment. I'm going to start another LLC and Deanna's going to be unharmed. Okay? So that is the benefit of having an LLC outside of your own personal name. Okay? To be able to operate, do business, and not be able to, for people to come for your personal assets. Now, the only way that, this is why, you know, we always recommend not to commingle assets together, you know, from personal bank accounts and business bank accounts, because if they took you to court and really the suite is in the LLC's name, but all the money is coming to Deanna's bank account, the suite landlord gonna be like, hold on. Okay, she says she has an LLC, but it's hitting her personal bank account. So is she really operating as an LLC, or is she operating as Deanna? And then her beautiful lawyers are gonna come real hard and they're gonna be like, excuse me, this is not a real liability shield. They're gonna pierce the veil. If you ever hear that terminology, they're gonna pierce the veil and they're gonna come after you personally. So that's why you wanna make sure you work with an accountant, such as myself, you know, and get everything separated. I'm gonna be transparent. I'm still over here. When you're starting off, have grace, because you're still getting yourself like I'm still separating, get everything going and flowing and right, because I'm starting off. Some of the stuff I have to invest in myself, and I had to start off with my own account. And when you go and get a business account, a lot of the times they're gonna do credit checks. They're gonna be looking for, they're gonna be asking for 500K deposits. You're gonna need to have that cushion and stuff together. Okay, Jamisa, we're gonna get it together. We're gonna get it together. All right. I'm gonna be calling you after this, okay? All right, but that's the reason why you want to make sure that you have things structured the right way and have grace on yourself when you start off, you know. But Deanna's not going into 2022 without having all her, you know, situations together. Okay, I'm just putting that out there. Okay, but now Let's talk S Corps, okay? Because I know everybody's like, okay, what are the advantages of an S Corp? What's the difference? What is the difference? Okay, well, here's the difference, okay? The S Corp comes in when you're talking IRS, okay? So, IRS, like I said, IRS does not consider a sole proprietorship in a corporation. They consider it you, okay? You pay that tax liability. Now, if you want an entity that will be taxed as a corporation, but it's not a full-blown C Corp, which we're going to get into, then you have the option to elect an S Corp status on your LLC. So here's the thing. The first stepping stone to owning your own business for most individuals that I would recommend, unless you're like doing a practice or so, you know, like if I want to build this out into my own practice with partners and stuff like that, maybe I'm going to go into a partnership, a LLP, a limited life, LP, all these different things, general practice. Those we don't need to consider. Y'all don't have to worry about those. But if you are starting a business, I recommend doing the LLC, because guess what? You can't do an S Corp without the LLC. You have to build the LLC first and then take the S Corp election with the IRS. So let's revisit. We go to the states to build our LLC, okay, because that's going to give us our legal protection. We go to the IRS to take our S Corp election, to have it treated as a corporation outside of ourselves, okay, to get the tax benefits in which I'm going to talk about. Okay, so the tax benefits are that when you're running an LLC or you're running a sole proprietorship, okay, let's take it back. You're an employee, you get a W-2, okay? If you ever looked at your W-2, you see that they take federal withholding, they take Social Security withholding, they take Medicare, they take all the stuff. And you're like, well, dang, I got like 2 pennies left. Yes. And guess what? If you're an entrepreneur, guess what? You still gotta pay the same taxes. I'm sorry, I hate to break it to you, but you're gonna pay that Social Security and that Medicare one way or the other. The way that they do it is they call it a self-employment tax. Yes. Self-employment tax of like 13% or whatever, to make up for that Medicare and that Social Security that you thought you was getting out of when you left and you didn't want to get a W-2. Okay, so if you're making coins with your business, right? Let's say we grossing $500,000 a year. Okay, cool. You're gonna be taxed as the $500,000 earner. What is their tax rate? I don't know, like 37% or something like that. So you're gonna be taxed at 37%, and you're gonna pay that self-employment tax. Okay, so you're not gonna bring home $500K. Okay, but guess what? If you take that S Corp election, okay, now we're talking, okay? Because here's what, yeah. So here's when we can get to some reasonable situations. When you take that S Corp election, now you can pay yourself a salary. Now you can put yourself on the W-2. You can't put yourself on a W-2 with an LLC. You could pay yourself, but you're going to be taxed on all the profit at the end of the year anyway. It's still better to have an LLC than to be employed by, just the W-2 worker without a business, because you don't get a chance to take advantage of write-offs. So when you're hearing tax write-offs, you're hearing all these buzzwords being thrown around. It's because as a business owner, you get to take tax deductions on all your expenses. So you're paying taxes on everything after you done spent everything. As an employee, you pay taxes on everything you got on that paycheck, and then you buying stuff. So it's reversed, okay? So there is some still advantages to being a business owner as an LLC. When can you take the deduction, and how do you take the deduction? You can take the election, You can take the election at any time. You basically take it, there's a form that you fill out. I forgot which form it is, but there's a form that you fill out. The thing about it is you kind of have to have an accountant or a tax attorney or somebody take it for you, because unless you paper file and do some stuff, and like you wouldn't fill out a tax return by yourself on paper, because more than likely, first of all, it's going to take 5 million years for them to get it and process it, and then they're going to send it right back to you saying, oh, you made a mistake, oh, the ink is wrong, oh, we couldn't transcribe it. Oh, Lalila. Background, we're talking business. I'm talking what the difference between S Corps, LLCs, Dba Is, all of that stuff, C Corps, all of that stuff is. So to take the S Corp election, you have to go to find a tax attorney, somebody who does taxes for the most part, because they already have the software that they need to do this. It's like filing a 1040, or if you ever had a business name change or a personal name change or something, you needed to change it with the IRS. Usually they're just usually saying, hey, this so-and-so's name, and we're checking the box, she's changing her name or something like that. So it's basically something like that, where you're basically filling out an IRS form, sending it to them, they're approving it. Now you have the S Corp election. I am going to look further into that and let you know, Jamisa, the specifics, for the details, but high level, that's what that is. I'm also in the, I got my P10 this week. So P10 is a paid tax identification number. So I can officially do taxes for the IRS, but now I need an EFIN number, which is electronic filing identification number, to electronically file these forms that I'm talking about. So that's taking a little bit longer. But once I get that in the software, I'm gonna be all into business and start doing those things. But that is pretty much what the, when do you recommend taking the lesson? So I recommend taking the election when it makes sense from a monetary standpoint, because, oh, thank you. So it doesn't always make sense when you're first starting off the LLC. I heard another tax CPA basically say he recommends people when they hit 40K or so. Thank you, Soraya. Once you hit the 40K a year range or something like that, you want to take it when it makes sense to pay yourself the salary, right? The salary is the key. So with an S Corp, you get a chance to pay yourself a salary. So let's say I'm an accountant. If I'm making 20K a year off of my LLC, it really doesn't make sense for me to take a W-2 for 20K, because for one, the IRS requires you to pay yourself a reasonable salary. So reasonable meaning it's not gonna put the business into debt, and you're not paying yourself a little too less. That doesn't make sense for an accountant. Okay, so if I'm an accountant and I'm paying myself 20K, first of all, that don't even make sense for an accountant to be only paying yourself 20K. But it also doesn't make sense for the business, because the business only brought in 20K. So the business is basically at a loss. So the IRS wants you to take what is deemed reasonable, right? So let's say you have a clothing business, okay? Or we're gonna use Order of Opulence, candle business, okay? Let's say you're the CEO of your candle business. Let's say your candle business starts bringing in, I don't know, we're gonna speak it into existence, $800,000 a year, okay? Candle business popping, $800K a year, all right? And so you're like, hey, I don't want to be taxed $800,000. Let's say you make, out of the $800,000, you make $500 in profit. So you're like, I don't want to be taxed for that whole $500K, okay? Because that's what you're going to be taxed at, the profit that you make. What you would do is you would change it to S Corp, and you would be like, hey, I'm paying myself a reasonable salary of $100K as the CEO of this popping business. Now you're gonna get hit with the Social Security, Medicare, all the W-2 taxes at 100K, at 100K, as opposed to getting hit with those high percentages at the 500K mark. You see the difference? There's a huge, I'd rather pay what's the tax rate? I don't know. let's say 30%. I'd rather pay 30% on 100K than 500K. Okay, the math makes sense. Now, the rest of that 400K is still going to pass through to you. Okay, you're still going to be taxed for it, but you're going to be taxed for on a lower tax rate, because now all the extra residuals are considered capital gain, and that's how all the rich people, get taxed less than us people trying to make it. They get taxed for capital gains and stuff like that, and then they find tax strategies like investing in buildings and lands and properties and hiring your kids and all that stuff. They find all those different strategies to reduce that. So that's what the benefit of the S Corp is that you get a chance to really pay yourself a reasonable salary and not have all of your earnings taxed at a ridiculous rate. Because what are you doing with 500K anyways? You're not doing unless you balling out of control, which I have seen, okay? You're probably putting that stuff into properties. You're probably putting that stuff into building other businesses. You're probably making investments with that money. And as a result, you don't want that money to be taxed when it could have been deducted from your business in the first place. Because that's what you used it to do. You used it to purchase things that you could have deducted, but now you just paid taxes on something unnecessarily. So that's basically what the difference between all of those are. Then you have a C Corp. A C Corp is when you're really doing business and you like, okay, I took off the S Corp training wheels. Now I got to be a C Corp. Now, C Corp is when, now you have a corporation. Now you have a corporation that you want multiple people to be able to invest in. Okay, because there are limits on how many people can invest in an S Corp. Like I think 100 people or something like that. I don't remember. But with a C Corp, you can have a limited amount of investors. But now it's like a real, now that benefit of whatever profits. The good thing is that you don't get taxed on those profits. Hola, Brianna. I'm talking business. We're talking business structure, corporations, the difference between each and everything. I'm going to save this so that people can go back and rewatch it. But the difference between a C Corp now, and C Corp is now you don't get those personal flow through benefits and deductions as the S Corp and the LLC. So tax deductions and stuff, now it's just whatever is deducted from your business as a business expense is what the business is taxed on. At that point, you don't really care too much what the business is taxed on outside of personal net worth perspective, because you're the business owner, so that helps your net worth, but you're not touching that money from the C Corp. Now you're not getting all those personal benefits that you got from the C Corp like you did a LLC and the S Corp, because now the C Corp is really treated as its own entity. Remember when I said from the very beginning, hola, Karen, from the very beginning, the IRS does not consider LLCs its own entity. It considers sole proprietors or people, individuals, or corporations. A C corporation, that's its own beast. So now if you have a C corporation already and your C corporation is on, let's say it's making $5,000 a year, you don't get a chance to benefit from deductions and all that stuff like that, because the C Corp is its own thing. There are no flow throughs to your own personal tax returns. The only thing you're filing on your personal tax returns now are your W-2s from getting paid from the business. So now you're back to being just a W-2 worker for the most part. Okay. Now there's still ways around, when you get into real deep tax strategy, that's when you really need an accountant, because that's when you really the IRS is saying, hey, what you doing here? You over here talking about you own a business, but I don't see, that's when things get real fuzzy. But the benefit of a C Corp is that's when you start building net worth. To be honest, that's when you're like, hey, I'm trying to grow and scale this thing to $100 million and sell it for $1 billion. So that's what the benefits of having a C Corp are. And at some point, you got to take off the training wheels of an S Corp, because at some point your business is going to be profitable and you don't want to keep being taxed for all of the profit of that business. The goal is to build a profitable business. So at some point you got to take off the training wheels and you got to make that thing a C Corp once you grow that thing. But I hope all of that was helpful. I'm also going to explain what a DBA is. A DBA is not necessarily a business entity. It does not give you legal shield. All it does is give you the authority to say, hey, I'm doing business as. So for me, I have an LLC, but my LLC is for like my hair business. So if like I want to create my own tax practice that's called Self-Suite Financial to build off of the Self-Suite brand. So yes, you're welcome. I'm glad this was helpful. I want to build off the Self-Suite brand. So that means that I don't want people writing checks or having my Stripe account in Deanna Brooks' CPA name. I want the Stripe account, website, all the checks people writing me, all the leases that I'm owning, all in the Self-Suite. Thank you, Soraya. I want it all in the Self-Suite Financials name. So in order to have a legal name, a DBA is basically paying for a legal name to operate as its own kind of like thing. So I think it's like you pay, you could register online. Texas, I think the fee is like $20-$25, but their system is mad complicated, so that's why you have a lot of like legal Zooms and stuff doing DBAs for you as well. But that is pretty much what a DBA is. A DBA is you just being able to like pay for a name that you could write on a check for the most part. So it's outside of your name, you know, and it gives you some type of a shield over your own identity, if you will. So that's pretty much the rundown of this. There are a lot of different nuances and stuff like that. But if you guys have any questions, always feel free. There's a Calendly in my link tree in my bio, okay? So you can book a one-on-one consultation with me. All the first consultations are free, and then I'm going to announce when I'm launching those strategy calls so that we can get each and every one of you individually squared away. Also, I got to promote all the businesses, okay? We got to promote all the businesses. If you are someone, earlier in the call, I mentioned credit, okay? All right, and I'm going to probably come on here and talk about business and personal credit a little bit more for people to understand. But like, let's say that you are an LLC. And I remember when I was talking about how for an LLC, you get a chance to operate as an entity outside of yourself. Let's say that I try to sign up for, I don't know, some type of property, okay? And they need to look at my credit, okay? They want to look at the business credit because the property is supposed to be in a business name, right? They look at the business credit. They realize it's not that much history there. It's a brand new business. There's not a lot of income coming in. It's, you know, you kind of starting off in the red already because you making a lot of investments before you made the money back. They're like, I don't feel comfortable investing in this because I don't know for sure if I'm gonna get my money back. But if you give me a personal guarantee as the business owner on your own personal credit, now I'm gonna give you the building or whatever the case might be. Now here's the thing. Now you open yourself up to the wind for them to come over and come after your personal assets. So that's the downfall of that. But a lot of the times when you're starting off, you're going to be guaranteeing your own things, and you're going to have like, I've seen so many people get turned down for the EIDL loan, EIDL increase, SBA loans, because their personal credit was not good enough to guarantee for their business. So a lot of the times, if you're a business owner, you have to have decent personal credit or it's going to bite you in the butt in them time crunches when you need cash flow. So if you need credit restoration, hit me up as well. I am doing that as well. And other than that, I will be back again tomorrow because I'm doing Monday through Fridays, guys, at 8 a.m. I'm going on early tomorrow, okay? I need routine. And I need to start early. So we're doing 8 a.m. tomorrow. And I'll see y'all again tomorrow. All right. Adios.